Good morning. This is Dylan Jovine with Behind the Markets. Happy Monday. Today is Monday, March 31st, the last day in March. What a slog of a month it's been for the markets, for us here at Behind the Markets. It's just been one of those uphill type of months. So we are happy to close it. Everything's been a little bit harder. It's always interesting when you're in markets like this and you're in times like this. Everything's a little bit harder. It's like walking or trying to run in a pool. But anyway, we remain optimistic, cautiously optimistic as always. That's about as optimistic as you can get in life, fortunately or unfortunately. But today I wanted to talk about something that I haven't talked about in a while, and that is the price of gold, which right now is at $3,062, right over 3,000, as we predicted last year. So woohoo, one for the good team, good guys. And Bank of America came out with a note last week saying that they could see gold rising to $3,500 an ounce on budget issues and China buying. And again, I could see gold rising even further. It really depends on the budget that the Trump administration really puts through, gets a deal with Congress. If the Trump administration sits down with congressional leaders of both parties and they come out with a way to really cut costs, structural costs, really entitlements. I don't mean cut your Social Security right now, basically cut my Social Security. They're going to have to adjust those types of things, meaning I'm going to have to wait a couple more years till I retire or whatever it is, maybe things like that, like Reagan did in the 80s when they did that with Daniel Moynihan. So basically, if the Trump administration comes into a situation where basically they come up with kind of a grand bargain with both parties, you got to do it, Republicans and Democrats, to actually pay for the tax cuts that he wants, then I don't see gold going any higher. But if the Trump administration pushes through a budget that basically just keeps our deficits at $2 trillion a year with interest payments at about $1 trillion a year, then I see gold moving higher as a hedge against the debasement of our currency. Again, as I've talked about here before, we haven't actually budgeted anything, frankly, since the Clinton year. Clinton was the last guy who actually cut expenses to match tax breaks, famously with Newt Gingrich, the contract with America and all of that. And what he left us, his last year in office, Bill Clinton left us a surplus. Isn't that astonishing? A Democratic president, granted, he was a center left, so he wasn't far left for sure. But he left us a surplus, the last president to do that. So we know it's possible when you cut expenses to actually leave a surplus. So I actually see, so it really depends on the budget. So I think the gold is waiting to see what happens with these Doge cuts. Are they significant or are they just nickels in the couch? Which so far they've just been nickels in the couch, despite the headlines. A quarter here, 20 cents there, a dime here, a nickel there. That's the equivalent when you think about the size of our budget. They've been basically a rounding error. So I think folks are on a wait and see approach status to say, let's see if these Doge cuts get actually more real and more significant. Number one. Number two, let's see if they actually tackle some of these entitlements, which Medicare, Medicaid, and Social Security. Now, Trump has talked about going after Medicaid, which is the program for low-income people. What's very interesting is that's going to be very challenging to sell because it's also become the place where Obamacare insurance recipients get funding their nationalized health care, basically that public option. And you know what? A lot of those participants are in red states. So, he's trying to thread a needle here. What he is going to have to do here is going to be a little shimmy, a little bopping and weaving to get something that makes sense. But if they pass a budget that is credible, that actually shows we're bringing the deficit down. It's not going to go down in one day. You can't do that. Just kill the economy. You actually have to have a plan for decline of the deficit over years. It's kind of like a 3-5 year plan, a budget plan where you show actual projections that the deficit will decline. That'll bring bond buyers back into the market, a credible plan. Until that happens, unless and until that happens, the price of gold is going higher. It also doesn't help that Trump's trade policies certainly incentivize people to push away from the dollars. Remember something, when we're trading with our partners, they're selling products into America, they're pulling dollars out, They're taking those dollars. What are they doing with those? They're bringing them back to Germany, bringing them back to China, and some of them, they're investing in the U.S. bond market. Guess what? They might not need all those dollars anymore. If they don't need those dollars anymore, the U.S. puts its reserve currency status at great risk, and it creates incentives not only for gold, but for also alternate currencies like the Chinese yuan. Basically, what I'm saying to you is the country that is most open to trade, that has the most convertible currency, will basically become the default. The biggest country that has most open to trade, most open to a currency, its currency is convertible, will become basically the dominant reserve currency over time. And that gives us a lot of great advantages because remember, these people buy our bonds, which keeps our interest rates low. They walk away from buying bonds, all of a sudden interest rates spike, markets crash, and it's a disaster for all of us. Anyway, that's all I have this Monday. I know it's a mouthful. My point is, the headline here is gold, the price of gold is really dependent on what kind of budget the Republicans, the Trump administration, what kind of budget deal they do. That's going to determine it, whether this has long-term legs or not. Have a great day.